Happy Friday, traders. It is Friday, August 15, 2014. It's 8:01 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of the overnight. Couple of news items. UK Q2 prelim GDP came in line 0.8%. It beats the year-on-year 3.2% versus 3.1 consensus. Ukraine's foreign minister says they're ready for bilateral ceasefire if conditions are met. So that problem over in the Ukraine is calming down a little bit. There's a Russian aid convoy that's on the border between Russia and Ukraine that's being inspected by the Ukraine and the UN. Russians are trying to provide aid supplies to the rebel sections of the Ukraine. Fed's Bullard yesterday said that he reiterates that he sees the first hike at the end of Q1 2015. Russia, Ukraine, and EU agreed to hold talks on supply of gas and trade. That's good for Europe. In Iraq, the Prime Minister Maliki agreed to step down and support the designated PM Abdadi. And then this morning at 7:30 Central, we got U.S. PPI final demand, 0.1% in line, and U.S. Empire Manufacturing missed 14.69 versus 20 expected. As far as what we could look forward to today, right at 8 o'clock, 3 minutes ago, we got net long-term tick flows. Let's see what that came out at. Looks like tick flows came in at negative 153.5 billion versus a previous 35.5 billion. And then at 8:15, in about 12 minutes, industrial production at 0.3%, cap utilization at 79.2%. The big number today is Michigan sentiment, which is at 8:55. This is a prelim number. It's a medium importance number. It is a market mover. 82.5 is the expectation, 82.5. And then at 9:45 Central, all-time Central, we have Fed's Kosher Lakota speaking. There's nothing on deck for the rest of the day. There are rig counts and things like that, but they don't really have an effect on anything. Let's take a look at yesterday's trading. Yesterday, very interesting trade. There was an expectation. The hypo for yesterday was that we would hold the upper HVN. Expected a test. If there was going to be a test into the range, I expected it to reach an extreme at 1940. It did not. It was not able to test anything at all. And so the targets above were 1951 and 1953. If you recall, 1951 is the CLVN in the area. 1953 is a key area that's been tested over and over and over. It's been traded a lot from way back in June, and it's got a nice big composite high volume node here, CHVN. So it's marked here as a key CHVN. It's been marked that way for a couple months. So the essentially what the market did is it opened. Let's dial this back and walk through it. All right, here we go. So it opened out of range. It tested 47 early. Could argue that that's the opening swing high, and then it pulls back to 45. Remember, 45 to 45.75 from this earlier this week. Talked a lot about that level. Pulled back to 45, put in a low, and then pushed to 47.75, only to come back to 45 again. And the 45 is looking weaker as the market sits here Sideways, the expectation is for a break of 45. There's a third test of 45 right there. And then fourth, and then finally it breaks through. It gets to the prior day's close at 44.50, and then breaks that by 2 ticks before it finds its buyers. So the biggest rotation at this point, up to this point, is this up rotation. See, 4.0 points from 44 to 48. It's an indication that with that being the biggest rotation, it's the indication that the controls on the buy side at this point. So the expectation now is for a push to 51. It continues to, it's a very difficult trade, to be honest. You have to be very, very patient if you're in a position. It finally gets to our target of 51 here at about noon, and breaks it by 2 ticks. A lot of things happen by 2 ticks in this product. And then finally on the close, we have the biggest rotation of the day, 5.75 at this point, and really strong delta. Now remember, I've been talking about delta a lot. Again, I mentioned it in yesterday's Trader Bite, that the deltas have been selling heavily for weeks now. And then all of a sudden, we have these deltas that are rising on the close. Look how strong that delta is. Look how strong this delta is. So there's some sort of a program that is accumulating long positions on the close. So we need to look out for that now. The sentiment has obviously changed here. Instead of a pullback, what we have is more of a push. We've taken back the entire sell-off that started on the 31st, and we've moved into the upper balance here, the upper micro composite. So our target now becomes 65, the naked point of control, 71.25. These are the bigger targets. 71.25, which is the micro composite point of control, with a minor HVN or high volume node here at 6750. So 65, 6750, 71, and then the expectation is that the market would battle this area. It's a high volume area between 5650 and 71. And if buyers are able to push back on sellers at this point, the new highs are imminent, and that's the way it's shaping up right now. If you're short, you know, take a look at options, take a look at hedging a position or whatever, and take that off the market turns. There's no way to predict what the market's going to do. All we can do is read the story of what it has done, see who's in control, try to determine who's in control, and then based on that, try to predict what it's more likely to do. Anything can happen in this market, but we can only trade from the perspective of what is more probable, what's more likely to happen over another, and that's what basically we're taking a risk on or betting on, and that's the way things are shaping up. Currently, the S&P is trading 1958, right against the point of control for the overnight. So if we look at that, a clear double distribution on the overnight, very, very quiet trade into the European Open. As soon as the European Open comes across, boom, it breaks out higher, and then it's been holding steady in that upper high volume node in the overnight, and is not able to fall through. Just now we had a test lower into the low volume node that separates these two distributions, and we see buyers coming back in and pushing it back to the point of control. There's a fair amount of strength here. Volume is pretty good, 170,000 versus 125,000 expected. So I think overall the market's fairly strong. Now, with that being said, I'm going to keep an eye on this 1956 today. Remember, 1956 is the edge of the gap. Remember, there's a gap we left behind here from the 31st, okay? from 52.75 up to 56.50. So 56.50 here is the edge of the gap. 56 is the composite LVN for this 53. If the market is able to test and hold above this 56, then the expectation is for 65 today. Does that make sense? That's the primary idea. If I do expect responsive selling on the open, however, but if it does come through, and it does push through the 56, I expect the trade to be very, very choppy, very murky, back into the 53. If it comes back into the 56 and fights it, and then finally we have a bigger rotation up than down, out of the 56, then again the overnight high is the likely victim of this on the overnight stat, and then we start to creep into the 65 point of control. There's a minor LVN at 63.50. I didn't mark it. It's very, very small. That might pose some resistance, but expecting today to be very, very quiet, pretty choppy. Don't forget that we have Michigan sentiment at 8:55. That's 25 minutes after the open. That's going to help determine some of the direction as well. The market's a little. It's interesting because it's been pretty clean, other than the fact that it never tested lower on Wednesday. It's been a pretty clean auction here on Wednesday and then Thursday. Thursday did its job. It tested the prior range and then started to trend up. This is what we'd like to see. Wednesday did the same. It did not get anywhere near the close, so we have a small gap here, a closing gap. I need to remove this. We have a closing gap that's still open, but overall the structure for this rally is actually pretty good. This seems to be sustainable to me, but I do expect that there will be a pullback. That there likely will be a pullback from the open here down towards the 56. If the 56 holds, it leaves a gap underneath, which is a weak structure. But if the 56 holds, that's pretty bullish, targeting 65 above with a minor resistance at 63.50 potentially. Okay, the 56 level comes from the CLVN, the gap zone, and the overnight LVN, as I showed you. Other than that, I wanted to actually show you a Bund chart the other day, and I forgot to do that, to show you how yields are at an all-time high. Look at this Bund chart. It's got a lot of noise in it here with my profiles and stuff, but let's get rid of that. But look at this. Look at this product. This is the Bund. It is screaming up since last year. Just very, very strong. And as the Bund goes higher, the yield on the Bund gets lower, and it's at all-time highs. It is a flight to safety in Europe. It's just incredible how much they're pushing this product. And remember, yesterday it made the yield made new all-time lows, trading coming in at below 1% for the first time ever. So something to watch out for. There seem to be some pretty big fundamental-ish types of things happening across the globe. That's why I go over the news in the morning. It's important to just be aware of what's out there. But I wanted to show you that Bund chart. The last things, for Stage 5 traders, our webinar is not going to be at 12 today. I need to drive back to Chicago from Toronto today. So we're holding our webinar at 10:30 Central in about 2 hours. And it has to be an hour long. It cannot go over, so that I can finish packing and leave here at a reasonable time. So the invitation should have been received, was sent to you, and should have been received by now by email. You also got it on the Twitter alert SMS system. Thanks for joining me, and have a great weekend. Remember, it's Friday. Do not blow your account on a trade. I just spoke to someone yesterday, incidentally, who did really well over the last 3 weeks and happened to just give away everything in the last 2 days, fighting the trend. I see that very often, and the only way around that is to just stick to your risk. Stick to your risk. There's no sense fighting a trade and hoping for a scratch. It's just a very, very poor approach. It's completely unprofessional. It's not sustainable mathematically, and it just does not make any sense. I suggest that you always know that if I'm wrong, I'm better off getting out, squaring up my position, regaining my focus on the market, being able to be objective on the market, and then initiating a new trade or being done for the day if I hit my risk limit. But if you give away just because you feel like it's the house's money that you're playing with, and a lot of people say that, and it really, really bothers me when somebody says, yeah, you know, my risk is off, it's the house's money. No, you earned it because it costs you a lot of money to actually earn that money on a trade. It probably costs you tens of thousands of dollars over the years to get to a point where you're able to make something trading. So it's never the house's money. Don't take that attitude. Treat it all, you know, trade the market, don't trade your P&L. If you have your P&L on the screen, I strongly suggest you remove it. It's very distracting and it creates more emotion that is necessary to properly trade. Good luck today, and I'll catch you on Monday. Take care.